Welcome back to the UK Crypto Podcast. I'm Paula, and as always, I'm joined by Matty. Today, I want to welcome back Jamie Nuttall. If you listened to the last episode, you already know Jamie, the UK's #1 award-winning crypto accountant, and why his perspective actually matters. Today, we're getting practical. This episode is all about the real mistakes UK crypto investors make when it comes to tax. Not theory, not scare stories, the things that catch people out every single year. And at some point in this episode, we're going to clearly break down what is and what isn't a taxable event in UK crypto, because that confusion alone causes more problems than anything else. The goal here isn't fear, it's clarity.
This episode is sponsored by the Crypto Wolfpack. Crypto Wolfpack is our private UK-focused crypto community built around education, support, and doing this properly and not gambling. And this is important. Any Crypto Wolfpack member who needs a UK crypto accountant gets a free 45 minutes one-to-one call with Jamie. This call is to understand your situation. This is not to have just a chat about crypto. This is in case you need his services. Jamie isn't just somebody we've brought in as a guest. He's part of the Wolfpack family. You can find the link in the description or head over to cryptowolfpack.co.uk.
In UK crypto tax, what catches people out the most?
Oh, what a way to start. I would say the number one is not doing anything is a decision. Okay.
Yeah.
So if you decide to do something or you don't do anything, both are decisions.
Yeah.
Okay.
So it's very simple, but that's the first sort of thing that catches them out.
So you can't bury your head in the sand and hope the taxman's never going to know about you.
You can.
Yeah.
It's a terrible idea. And more importantly, that's a decision you have made.
Yeah.
So just be aware of that. That's
Yeah.
the first thing. The second thing is data amalgamation is going to take a lot longer and be probably the main issue, even if you have someone like myself on your side.
Right.
If I don't have the data, I can't do much without that. We can kind of figure things out and caveat things. But yeah, so making decisions, finding the data itself. And then the third thing I would say that most people, in terms of mistakes that most people make, is they assume that the software will do it for them.
Right.
Now, the analogy I like to use is, say you want to mow your garden, okay? So you buy the fanciest lawnmower. That's the software. Mm-hmm. And you leave it on the lawn or the garden.
Yeah.
That's not going to sort itself out.
Yeah.
You have to use the tool.
Yeah.
Yes, it makes it easier, but you still have some work to do. It's the same with software. You can't just put everything in and go, done. You have to do the bookkeeping or the reconciliation, as we like to call it.
Yeah.
So, and then that's probably the main mistake that people make is they go, right, maybe chuck everything on and it's done. Now, that's not to anyone's fault, because if you look at the marketing for the tax softwares, it goes something like, get yourself tax ready in 40 minutes. It's like, yeah, great. It will be wrong, but you'll be tax ready.
Yeah.
So yeah, those are the top
And I
three.
guess going back to your analogy, yes, you can have a lovely lawn, but if you don't trim the edges, then
Exactly.
it's still not done properly, is it? So you've got to, then the software might be able to do a lot of it if you do the things that you need to do with it, but there's probably still stuff that you're going to need to add in, and somebody like you will be able to help guide people as to what else they need.
Yeah, that's exactly it. And if you put it in sort of a general business setting, if you have a company and you link up all your bank statements and bank feeds into software and then do nothing, it's going to be incorrect. And everyone goes, oh yeah, obviously. It's the same for the crypto tax software.
Because there's been a lot of changes, hasn't there, in the UK, or so people think, because this idea that 2026 and January was the new law that came in about reporting your taxes, but actually that's not quite right. So I'll let you explain it, because obviously you're the professional.
Yeah, so you're talking about the crypto asset reporting
Yeah,
framework.
your favourite CARF.
CARF friends. CARF friends.
That's our podcast. The title of our podcast, CARF Friends.
I'm not sure anyone's going to watch it.
So CARF is the crypto asset reporting framework.
Yeah.
This doesn't change anything, but it's to help people be more correct, if you like. That's the sort of message. It's also to kind of put a fire up everyone's bottom to go, look, we're going to get data, so you just get it sorted. It's their final warning shot, in my opinion. But it's not like a new law or anything. The current legislation that's in place around taxation still covers crypto. It always has done.
Yeah.
The difference is sort of 5-10 years ago, people couldn't put crypto into the context of the tax legislation or tax guidance or anything like that. It was just, no one really understood it. And that's where my sort of journey began, where I started to go, right, if I understand crypto as a whole, I can make the legislation kind of fit. And to be fair, most of it is still relevant until today, because although a lot has changed, the change is just education around it rather than actual change in anything. And
clarity.
Yeah, exactly that.
Yeah.
Now, the guidance that's available from HMRC is still somewhat convoluted, but it is way better than it was. I remember back in the day when I literally printed off everything they had, crypto manual, whatever it was about that thick. Now we're talking it's 10 times the size.
Yeah.
Does it need to be condensed? Does it need to be more? Does there need to be more clarity around it? Absolutely.
Yeah.
But at least there's steps being taken.
Yeah, because the reality is that you've always been expected to report your tax. Obligations. You've always been expected to, any gains you make from any investments, whether that's crypto or not, been expected to report them. But I guess the change is coming in now that the exchanges are going to be required when HMRC ask for information to provide that from people. And a lot of people holding crypto thought it was this thing that was away from everybody and that they could decide if they wanted to share that information. And I think that's probably been the change, where crypto has gone from being decentralized, away from governments, away from banks, and it is moving into more of that traditional investments, just like you would treat stocks and shares, I guess. And with that comes a lot of people that are frustrated because they felt they were investing in something that it isn't now, but the obligations are still there and are still the same.
That's exactly it. It's never really been outside the scope of tax. It's always been within the parameters of taxation. It's just that people didn't understand it. And I mean, even till today, I'll get people going, wait, crypto is taxable.
Yeah.
And it seems very obvious now, but people still asking the question, let alone sort of half a decade ago.
Yeah.
Now, one thing I want to point out very quickly that's quite important. You mentioned that the exchanges have an obligation. You are correct. But it's not just exchanges.
Yeah.
They are the RCAS, Reportable Crypto Asset Service Providers. Exchanges will likely fall into that category, but so will brokers, anything sort of peer-to-peer, anywhere where you're actually transacting with crypto can come under that. So I got asked this question at Zebu during one of my panels, and at the time it stumped me a little bit, and I've looked at it since. They said, what about Ledger, for example? And I went, hold on. And since then, I've looked at it and I've gone, that actually could come under RCAS. So even your cold storage wallets may still come under that banner, even though it's not a centralized exchange.
So I think I might have an answer for this, because I was talking to a brand of cold store wallets, and I was talking about exactly that subject. And basically, we were talking about UK regulations, how it's quite slow, difficult compared to other countries. And we spoke about this exact topic, and they were saying from their standpoint at the moment, as long as you are holding your crypto, it's a no. Okay. However, with modern cold store wallets now, you can buy and sell and swap crypto.
Yeah.
Okay. Now, what they're saying is, though, when you're buying crypto, quite often they will use third-party exchanges, and if the KYC is applicable, they make you do it inside the app.
Yeah.
I was like, you don't make us do it for swapping. They said, what do you mean? I said, if I've got Ethereum and I want to swap it to Bitcoin, there's no KYC involved in that. Yeah, that's a taxable event. And they went, oh. Yeah. And it literally was an oh moment. And I'm thinking, how was I the one that brought that to the table? I came off the call thinking, But I think and then I started questioning myself, going, well, maybe I'm wrong. And I thought, I'm not wrong. That's a taxable event. You swap one for the other. That's taxable. No, we don't need to go deep into taxable events here. We can do this later on. But it was a major brand. That's all I'm going to say. It was a major brand. And I was like, wow. Like they had no point of reference for it until I said it.
But this is the problem, isn't it? Because the UK's got one set of regulations. Europe's got another set of regulations. The US has got another set of regulations. And that may be, if you've got an international global brand, how can they make sure that they fit in with all of that? That's tough.
It's almost impossible, but I think it's definitely doable. And when you've got people who are far brighter than us three combined, they can deal with this type of thing. Now, from my perspective, the only thing that can help the situation from that is to actually separate your cold storage wallets from the exchange type aspect of it, where you're buying and selling, whether it's on Tangent or Trezor, whatever it might be, so that you have an option to have your cold storage wallet, but you don't actually buy or sell crypto on there.
But
it's just a storage
But in the
system.
modern world, the way the wallets are going, they want more functionality. People want more. Now, an old pen drive, it's fine. Just sits there, it doesn't do anything. And even like the early crypto wallets, like what we see now, when they had nothing else going on, that's just sat there. It doesn't matter. But now you can buy, sell, swap. You can store NFTs. You can swap NFTs on there now. That's just been launched, hasn't it?
And
so all of a sudden, this is now getting to a murky grey area with UK tax, in my opinion.
And that is where the RCASPs come into play, and why they've probably not specifically said centralized exchanges. They've categorized in such a way that if anybody were to act like it, it still counts. So that's my sort of personal worry around it, really.
Yeah, because I make content on this all the time, and the overriding thing that people say to me is, put it on your cold storage and they will never know. And I think
they will.
How many people are going to get caught out by this? Because it doesn't matter if you've linked any kind of crypto purchase to somewhere that has KYC, whether it was 5 minutes ago or 5 years ago, the blockchain doesn't lie. It's all there.
That is 100% correct. But the important bit is that's tax evading.
Yeah.
If they are trying to hide things, that's the problem. It's not whether they can catch you or not. That's irrelevant. The problem is you're trying that, and people can do what they want. You have free will, whatever. But remember, as I said earlier on, that's a decision. Make your decisions. Just know that that is a decision. And the repercussions of that are far greater than if you try to sort it out. For example, if you are proven by HMRC that you are deliberately doing something and trying to hide it, the penalty for that is up to 100% of your liability.
Wow.
So you go from let's say 24% tax bracket for your capital gains, it's gone up to 48% just on that, plus interest, plus other, you're talking 60-70% of your gain.
Yeah, crazy.
Plus probably penalty fines as well.
All of that, you're at the point. And that's if your crypto doesn't fall at all, you're still at a loss. Imagine if it falls on top of that, you're hand in your back pocket trying to cover all this.
Crazy. Now, looking about the most common mistakes that people make, and try to avoid the taxable event element here, because we're going to talk about that later. But if you had to rank some of the most common mistakes that people are making when it comes to crypto tax, what would those things be?
So aside from just not doing anything.
Okay, just avoidance, you mean? Just
avoiding
the situation, head under the duvet, don't want to think about it.
There's a high percentage of people that come to me and say, Jamie, I'm worried. I was like, look, let's look into it. There's a chance it could be either way. And there is a certain percentage of people that once I've done my job, I've gone, you legally owe nothing. And you legally don't have to tell them anything either. And if they ever ask, here's proof. So these people started with that mentality of, I'm not sure, I think I do. Turns out they didn't, So the number one is be certain. Try and figure something out. If you're not sure and can afford it, try and hire someone, or you can do it yourself to a certain degree, especially if it's not particularly complicated. So that's the top one. In terms of mistakes that people make is not doing their research.
Okay.
So HMRC guidance is a bit daunting when you first start out, and that's why people hire people like myself. But it is you can read it, and let's be honest, you can probably ask AI to summarize it in layman's terms for you. So without that basic understanding, how do you know, for example, if your airdrop's taxable or not? And if you didn't know that that makes a difference, you really should if you're doing your own stuff. So a little bit of effort is probably the mistake, or a lack of at least a little bit of effort is probably the mistake that most people make, even if they do it themselves.
Absolutely.
And do you think it's like a lot of the mistakes would be around like poor record keeping or misunderstanding the rules, or is it just ignoring it? Like you said, the people putting their head under the duvet.
So poor record keeping is not an excuse because it's on the blockchain.
Now,
you just got to get it.
It doesn't matter.
You just got to gather it.
It's there. The problem is if you're on certain exchanges where they can't give you the data, that's when it becomes a problem. And I think that's what CARF's trying to resolve, which I fully respect. It's the other side of it, security, which I won't go into right this second, that I don't like at all. But record keeping, I don't think it's too much of a bother. Yes, it helps. I've got clients that go, Jamie, I can't remember. That's a whole new ball game to Jamie. I've got detailed, logs of what I've done every single time. So when I go, what did you do here? They look at them and go, oh, this is what I did and why. And it might be a case of, oh, that's fairly easy, done. Or we go, So you're telling me you sent it to that another wallet? Yes. Is that wallet yours? Yes. I haven't got that wallet. And they go, oh, okay, let me add it. And then we get a bigger picture, we get the full data. So 100%, I would say, although the mistake isn't the data itself, and not having records itself, I think the mistake is not realizing that certain exchanges, which I won't mention, only allow for like 18 months prior, which is a big problem because if you realize late, you're not going to get any data prior to that.
Yeah.
Your tax bill will go up because you can't really tell me what your base cost is at that point unless you have the data. So you should really put it as 0, so everything's taxable.
Yeah.
So,
wow. Yeah, crazy.
And the thing is if you hold some crypto or if you do some leverage trading, not everybody actually needs to report that to HMRC. So what's the kind of what's the benchmark? What point have you actually got to start telling HMRC?
Yeah, so there's actually 3 notes for that. So the first one is if you have made gains over the annual exempt amount. At the moment, it's £3,000. So that's one of the reasons to report to HMRC in some fashion. So i.e. you have taxes to pay.
Yeah.
The other one is if you already do a tax return, maybe you're self-employed, maybe you've got rental, whatever it might be, and your proceeds are over £50,000. Now, I still get this question a lot when I send the clients their reports. Let's say you're a client of mine and I go, here's your reports. And you go, Jamie, it says £5 million worth of proceeds. I've never seen £5 million. I've only had like 50 grand. The point is, if you had £5,000 worth of Bitcoin and you swapped it with me for £5,000 off of Ethereum, that's £5,000 proceeds, £5,000 cost, 0 gains because you've not made any money.
It's about the gains, isn't it?
It's about the gains. But your proceeds are 5 and your cost is 5.
Yeah.
If we then swap back and do that 10 times, 50,000 proceeds, but £50,000 costs, 0 gains, but you still only have ever had £5,000. So you might see your proceeds shoot up
through the roof.
Yeah, and that's very common. And we've dealt with HMRC with this years ago. So thankfully they're not questioning it. I've never had them question it. But that's another reason to report if your proceeds are over 50,000, which is very easily done, and you already do a tax return. The third one is if you have losses. Now, you might not need to put it in your tax return if you don't have a tax return, for example, but you can put it on a tax return. You can write to HMRC or you can put it on another tax return.
I've seen you talking this about crystallizing losses. I've seen recent videos that you've made on social media this week. Now, at the point of recording this, we are mid-February. So at the moment, I've seen you making it about crystallizing. Is crystallizing not the right word?
Yeah.
Crystallizing losses, So that's obviously going to be a hot topic for you at the moment with running up to April, I should imagine, trying to make people understand that.
I think that this is a unique situation that comes around once every cycle. Okay. Right. So let's say April time, the markets were decent and you've crystallized some gains. Okay. So you're sitting on, I don't know, call it £20,000 worth of gains. Now the markets are down. If you don't do anything between now and sort of 5th of April, that £20,000 worth of gains you've made is going to create some tax liability, which you need to pay. Fairly basic. However, because the markets happen to be down within the same tax year, you can do something called tax loss harvesting. I think it's like wash trading in America, which may or may not be allowed, but in the UK, you can do that. So what I'm saying is, let's say you have £10,000 worth of crypto that cost you £50,000. What you can do is dispose of that asset, all of it, some of it, whatever you like, as long as you don't buy it back within 30 days, which in itself is a problem. You can crystallize those losses. So now that £40,000 loss compared to the £20,000 gain, you net that off a £20,000 loss. You report that to HMRC, you pay no taxes, you bank some losses.
And you're saving it for next tax year.
Saving it for any point in your entire life, as long as you banked it within 4 years of its creation.
For any time in your entire life?
Yes. If you tell HMRC you've made...
I never knew that.
No.
If you tell HMRC you've made losses, capital losses, you can use it at any point in your entire life.
Wow.
That's really good to know, isn't it? Because there will be times where you need to offset some of that. That's awesome. That's really good to know.
Where people trip up here is the 4-year rule. The 4-year rule is you have 4 years in order to claim it. After 4 years passes, you can't claim it anymore. You can never use it. It's gone, lost. So if you're in a situation now, what was it, 2026? So if you're in a situation where you have losses from 2022 tax year, soon as we tick over to the 6th of April, you cannot use those losses anymore. So if you have 20,000 losses in 22, you haven't claimed, but you've got £20,000 worth of gains in 23, you'll be sitting there going, well, they set off against each other. It's net zero. Correct. But if you haven't claimed those losses and it ticks past the 4-year mark,
you lose them.
Still have the liability, but you lose the losses.
Yeah. What about small trades? So you've got people that are going onto platforms and they're making small trades here and there. Are HMRC interested?
When you say small trades, are we talking about volume of trades? Are we talking about the value of
little
trades?
Ones.
Just little.
Somebody might put $10 on an XRP long and $10 here, $10 there. The reason we're saying this is because this is a common thing for people to say to us. They'll be like, well, I don't do a lot of trading. I'm like, you trade every day. And they'll be like, yeah, but I only do $10 here. This doesn't matter. And I'm like, well, it does. You have to add it up. So yeah, that's why she's asking, because it's really common, mate, honestly.
I can't really give a definitive answer because it is dependent, but the key items are, did you make gains above the annual exempt?
Yeah.
If you did, yes, you do. If you didn't, maybe you don't.
So if you put on a $10 trade and everyone won and it took you over that bracket, then that $10 trade's gonna matter.
Exactly.
Yeah.
Whereas if you put in $2,500 for 1 or 2 trades and you didn't make any gains, you probably don't need to do anything. You might have some losses you want to claim, but you've got 4 years.
Yeah.
So again, it is relative to what gains you have, how often you trade that, because a million trades at £10 is probably worse than 10 trades at £10,000 in terms of breaching the threshold.
Right.
Like both breach the threshold, but one absolutely annihilates it.
Yeah.
But so yeah, it's variable. It really is.
So the next section I want to talk about, for me, this is probably the most important part for me. Because it's something that me and you have done many, many times on TikTok lives, YouTube lives, community lives. But no matter, every time we do it, people learn something. And it's about what is and what isn't a taxable event. Because this is the one subject that I think is really important for people to understand.
Yeah.
And it also seems to be the one subject that very few people do understand until it's explained to them. So if we want to break this down about exactly what is a taxable event in terms of crypto UK rules as it stands right now in 2026.
Okay, so yeah, that's the foundation of everything. If you understand this, you'll be able to do a lot on your own and at least understand it. If you are disposing of an asset, it is a taxable event. The problem is, what does that mean? You don't know what that means specifically. So examples include selling, swapping, gifting. Technically, losing and lost assets is a disposal in some cases.
Yeah.
Theft can be a loss as well. But basically, anytime the quantity of assets that you hold goes down, for any reason, for any reason at all, if you do something that you have, 10 Bitcoin, and then next thing you have is 9.5, that's a disposal. Regardless. They are all taxable events, apart from if it's a disposal as in a gift to your spouse or civil partner. That's the only exception. It's still a disposal, but it's not a taxable event.
But I mean, are we just talking about crypto coins? Are we talking about NFTs? Are we talking about is it everything that's in the crypto space that we're talking about here?
Everything full stop.
Right.
Houses, shares, crypto.
Yeah, because there's not crypto tax rules. It's actually capital gains. It's just being used in this example for crypto, right?
Yeah, exactly that. So that's the main sort of triggering events, if you like, is the disposal of assets. Acquisition of assets, if you purchased it, that's not taxable in a lot of cases, as long as it's market value. If you were gifted it, as long as there's no strings attached to it and it's a genuine random gift, it's actually the gifter because they've disposed of the asset.
Of course,
If it's, let's say you guys pay me 1 Bitcoin to be here, that's different to you.
We didn't, by the way.
They did. I mean, no, they didn't, Mr. Taxman. Let's say you were to give me, so you were to give me 1 Bitcoin to be here. That's different. That would be a disposal on your side, but it would also be income on my side because it's an exchange for service. So that's one of the few times where acquisition, where the quantity of your crypto asset going up is a taxable event, is if you do it in lieu of service. So that's very important as well. The other thing that would cover most people would be if you stake your crypto assets. Number one, when you have the right to receive the reward, or when you receive the reward in most cases, that would be under the income tax regime.
Yeah, so
income.
that's the same as it. So now, quite often now, it's not just staking, it's yield, which again is slightly different, but it's the same rule, right?
Yeah.
So at the moment, I know a huge number of my audience, in fact, all of our audience actually, have got Tangents, and they've got the new yield mode, which is doing really, really well. I spoke to Tangent, and they were telling me actually the take up of that is really impressive.
It's super easy though.
It's super easy.
That's
I
why.
don't know if you've used it yet. It's literally one button, mate, bang, and it's off. So it's really good. But that's a taxable event. So as you're earning that income, there is a tax to be element to that.
It's quite slow.
It depends on what you got in it.
Well, that's true. But I mean, on the stablecoin one, I was watching it go round and it was a little bit low.
Well, this morning I got offered 6.4% on a stablecoin.
Oh,
6.4%.
That's crazy.
Maybe I wasn't staking the right stablecoin.
Without taking us left field here from here, no wonder the banks in America are kicking back on the Clarity Act, because they offered me this morning, and they would have offered the Americans the same, right? 6.4% to have my money in a stablecoin yield instead of in the bank. No wonder the banks are shitting themselves in America.
Yeah, but if this goes too far, we're going to get another FTX of Celsius situation. I've seen so many of these centralized organizations where they've offered incredible yield that they cannot sustain. Now, 6 doesn't sound too high. I'm talking like 40, 50% in some cases. But that receipt of yield, rewards, staking, whatever you want to call it, the rewards itself would be miscellaneous income. Now, one thing that you need to be very aware of is, at the moment, if you were to stake in a DeFi or DeFi-like protocol, you need to look into to see if you lose beneficial ownership.
If it's a disposal,
Because it's a disposal as well when you go into it. Now, it is public news as of now, so I can talk about it. HMRC are looking into this. I'm one of the consultants that are dealing with them to redo and rework this. So I'm hoping in the future they will change that to make it a lot more fair and appropriate, because it's a bit silly, isn't it? That it's a disposal.
I just want to break that down in case we've got any newer people to crypto that might not understand that, okay? Because our audience is really varied, from the highly experienced full-time traders all the way down to brand new people. So I'll give you an example. If I owned, I don't know, 10,000 XRP, and I said, Jamie, will you look after it for me? And I sent it to him, right? That's a disposal, because I'm giving you that crypto to look after, right? It's the same as what he's saying about the staking, right? So by the way, as I sent it to him, it would instantly be a taxable event. So the tax would be due on my profits as I sent it to him. So it's the same with this staking. So some staking protocols, you have to send them your crypto for them to look after. That's actually a taxable event. What I would like to say is, with Tangent and the yields, you don't lose ownership of your crypto. Now, they've made sure that's correct within UK law as well.
Yes, and I don't think it matters too much, because that's a CFI situation. I'm talking DeFi only. DeFi specific. So anything that's CFI is outside of the scope. But it should hopefully change soon.
And I guess I just want to put a little caveat in there. There's loads of people that are scamming people in crypto.
Be careful.
And staking
yeah.
protocols can be one where you can send your crypto to somebody in the hope you're going to get a yield back, and then in hope you're going to get your crypto back, and it doesn't happen. Just for anybody that's new in the space, just do your due diligence.
I would like to give a blanket milkshake Matty rule. I'm looking down the camera for this one.
Whoa.
For anybody, unless you are an experienced into crypto, and I mean you've been around, you've seen it, you've breathed it, you've seen the mistakes, maybe you've made mistakes in the past, and you know what looks and smells bad. If you're relatively new into crypto and you've only ever bought and held before, don't send your crypto anywhere. Number one way to stay safe, okay? It's number one way, because there are some great things out there that you need to send your crypto to. But even I am super cautious. So if you're relatively new into crypto and it looks too good to be true, just don't send your crypto anywhere, and you don't want to, because there are so many of these projects out there. In fact, for every, I don't know, I'm going to make a stat up, but for every one of the real ones, there's probably 10 fake ones out there designed to rob you. So the best thing to stay safe is just don't send your crypto anywhere. Don't send it anywhere.
But if you're staking through something like your wallet, like Tangent, you know you're pretty safe with that.
Well, you don't lose ownership. It stays on your wallet.
It's safer. It's definitely safer.
Exactly. So we talked about disposals, and we talked about staking. What other taxable events have we got?
Yeah, so like I said, in exchange for service is a big one that people forget. Mining is a big one that people just don't do anymore, but still remember. If you're in a situation where you earn Bitcoin That's a taxable event. And then you later dispose of it, sell it, swap it. That's also a tax event as well.
Because swapping is a taxable event. I don't think people realise because they've got the same amount of money in their wallet.
Yes.
This is a big one. This is one quite often when I'm talking to somebody, it's like you see them like what?
Yeah.
So really explain that one, because I think this is an important one, because this is the one they miss. This is it, man.
So the reason why it's a disposal specifically is I have token A. You have token B. If I sell token A for fiat, I have disposed of my token A.
So for cash, for British pounds or dollars,
So that's a disposal. Everyone understands that, or most people understand that.
Yeah.
If I were to do it for your token B, it doesn't matter what. It's not about what I'm receiving. People think it's about receiving fiat. That's irrelevant. It's the fact that I am getting rid of. I'm disposing of token A.
So you bought token A went up in value.
All of that is irrelevant.
Oh, okay.
I have gone from a position of owning token A to not owning token A. Whether it's for fiat, whether it's for service, whether it's for a swap, whether it's for trade, whether it's a loss, that's a disposal. So that means all trades, doesn't matter, you're losing token A. Or trades for fiat, you're losing token A. So the subject of the matter is your asset and the fact that you had it and then you didn't.
If you, for instance, have Bitcoin, if the amount of Bitcoin you own gets less, then that's going to be a disposal, isn't it?
Yeah.
And it doesn't matter whether or not you've got more of something else.
But just to be clear, you're not talking about the value of the Bitcoin.
No, I'm
you're on about the number of the Bitcoins.
Money,
the quantity.
Exactly.
Now, there is one situation that doesn't quite
I
apply.
knew you were going to say this.
Just when we think we've got it, and you go, well, there is one HMRC rule which completely fucks it for you guys.
Go on, it's not actually a HMRC rule, and and this might only be applicable to the 1% of your listeners, but have you heard of rebasing tokens?
No.
So rebasing tokens is where the token itself, you can tell I'm a degen.
I loves it.
The actual quantity changes.
What do you mean?
So it rebases the token. So not only does the value go up or down, but the amount that you have or entitled to goes up.
Okay,
or down.
I'm with you. Now I understand what you're saying. I've only thought about that. So that's another taxable event.
Well, it might not be.
Oh, Jesus Christ.
So if you are the 1%, you probably need to go and speak to Jamie about it.
Yeah. So
if I get in that situation, I'm just going to go, Jamie, that thing has happened. Can you please sort it out? Thank you very much.
So there's a few things that I go through my checklist when I speak to leads, and that will increase my fee.
Right.
Rebasing tokens.
Yeah.
Nodes. Meme coins.
Nodes? I was about to do a node. Is that bad?
It's just a little bit more effort for the bookkeeping and the accounting.
I'm not doing a node.
That's all it is. So it just increases my fee slightly.
I'm not doing the node.
And what about meme coins? Why does that increase your fee?
Because with the data for meme coins, especially if we're talking low caps, it's a lot harder to obtain in some cases.
Yeah.
And if you are a meme coin trader, chances are you have a Phantom wallet.
Yeah.
And chances are you probably already have a MetaMask wallet. And with those wallets, I know from experience that you are going to be peppered with just
airdrops.
Airdrops.
Oh, mate.
Yeah.
Drive me nuts.
And in some cases, depending on what you do, it's difficult to differentiate between that crap and what is genuine in your portfolio.
Right.
Because all I will see is income assets. Most of them will be crap, but some of them, if the software doesn't pull in the value, I'm going to look at that and just go, that's probably crap, right? So I have to be a lot more vigilant with myself and the team.
It just takes a lot more work.
Yeah.
Okay.
And then on top of that, we then have to go find the value.
Yeah.
Or talk to the client to get the value
Yeah.
or whatever it might be.
Wow.
So it's just a little bit more work.
So that's something to bear in mind. If we've got people watching the podcast now and they are interested in trading meme coins, that's something that is their bag. Mm-hmm. Just when they think about doing their reporting, just to bear in mind it might be more complex.
Absolutely. And if you are a meme coin trader, the number one thing you can do to help all this out is that's when I would love for you to keep records. I know I said earlier on you don't need to, but in these cases do, because it gets a little bit tricky and it just helps.
So what would they need to do? Price, the day, what it was?
Honestly, we can deal with all that.
Yeah.
That helps, but at the very minimum, just let me know. Give me a list of what meme coins you were trading with, and then I can ignore the rest.
Right.
And then that just speeds it up. But if you have the value of it, if you have a place where we can find it, if you have any information, tell me. The more, the better.
Yeah. Well, the more information they give you, the less work you have to do.
Yeah, exactly. And if you give me too much information, cool. I've still got everything I need or everything that can be used.
Yeah.
I think there's going to be an element where your job is going to have more of one of these types of disposals than you've ever seen before, and that's going to be spending crypto. Because before to spend crypto, you have to either have to have somebody that's willing to receive crypto, which obviously that happens within the crypto world, but it's not mainstream yet.
Yeah.
But we'll give you an example. Tangent Pay. right? Tangent Pay are launching a card which you'll be able to have on your either Apple Pay or Google Pay on your phone, and you will literally go and buy your coffee. Okay.
I am so excited by this.
Wait a second. You could, because you know, with Apple Pay, do you know what the limit is on Apple Pay in the UK?
There is no limit.
There is no limit.
Wait. I could buy a Lambo.
Yes, with
crypto.
On your Tangent Pay,
That's the
in the
dream.
UK, because there's no upper limit to Apple Pay anymore.
Yeah.
They've abolished it. You can buy a house.
Yeah.
If you've got balance, you can buy a house, right? Which is wild, right? So I know for a fact now that people that before would have had to swap their crypto, sell their crypto into cash and head to their bank. And that is one transaction, where now they might go, oh, I'm not going to do that. I'm now going to do 500 transactions with my card over the next couple of months. So that's going to be a thing, right? It's incoming. And how are you feeling about that, bro? Because that sounds like more work.
It's not.
Oh, why?
So you know how I said the software does stuff, but not everything?
Yeah.
That is some of the stuff it would deal with.
Come
Awesome.
on. Well done,
So
software.
yeah,
Well
so
done.
I'm expecting the software so I can see disposal of whatever it is going out. We just need to make sure that wherever we can identify that transaction, it's a disposal. That is it. It's probably going to be correct from the get-go, probably. So I don't think that that's going to be an issue whatsoever for us. It does mean that your level of transactions go up overall. So it might cost maybe, I don't know, 2% more for my fees just to double check it. But I'm not going to be spending much time if the software does what I think it will do.
Okay, I've got a
go on.
question. I'm not even sure.
Is it about this? 'Cause
Yes.
Mine's about this too, yeah, good.
I'm not even sure if we'll keep this on here, but I'm going to ask it.
Yeah.
If I dispose of my crypto because I'm using it to buy coffee or a Lambo, and that's a taxable event.
Correct.
If I was to spend my normal money and do that, that wouldn't be a taxable event.
Correct.
So why are people going to spend their stable coins to do that?
That's a wonderful question.
Oh, awesome.
And look at his eyes. He loved it. Look at You're such a tax geek.
Yeah, I am.
Tax geek. He's a tax geek. Jamie Nuttall is a real tax geek.
I'm a geek.
He fucking loved that one. Sorry, go on.
Okay, so how did you get the stablecoin in the first place? You've probably converted it from another crypto asset to the stablecoin.
Or I've decided I don't want to keep my savings in the bank. Okay. I'm going to put it into stablecoins.
So with stablecoins, there's going to be very little gain or loss anyway, because it's pegged to probably the dollar in your case. So we're only looking at the difference between the US markets and the GBP, for example. So that's almost irrelevant. But let's say you've got Bitcoin that you've gone to USDC. That's the taxable event.
Right.
So then when you use your USDC to tap and buy, that's going to be...
There's no gain.
There's no gain.
There's no gain to tax
That's
you
the
on.
important bit.
Okay.
Right.
But if you were to go from Bitcoin to USDC, then to your bank, it's exactly the same. There's still very little gain or loss. It's basically of negligible value. That I shouldn't use that term because that's different, but it's negligible in terms of your tax difference. So it makes no difference what you do, because either way, the taxable event has already happened.
Okay. So it's not a case of...
Just to make it clear as well, if we're using that Tangent Pay as an example, you actually need to swap the crypto into a USDC.
That's the taxable moment.
Yeah, that's the taxable moment, separate. And then when you're spending,
that's another
you
taxable
don't
moment.
even need to track the spending of a stablecoin then. Well, obviously you do, because it naturally does it in the system anyway, but it's less important, isn't it?
It will literally be a fraction.
Negligible.
Yeah.
Yes, it's part of the calculation, but the main taxable moment has already happened. So and even if you do it, like I said, from USDC to fiat, that's the same as if you just tapped your card and spent the USDC. So
Okay, I've got another question.
Can I do my question first?
No.
Because I was already in the queue.
No. I get paid in USDC very often.
Sounds dodgy to me.
If I then use my Tangent card to pay for my coffee, that's going to be me disposing of my USDC, but that wouldn't be capital gains, would it? Because I'm being paid for services.
Yeah, it's income tax on when it lands in the first place.
So
he's got it.
Come on! I love these quizzes.
So am I liable to pay my tax at the point it lands in my wallet, not the point that I dispose of it?
Both. So let's say you get paid £10,000 in USDC. That is for services. I assume that would be self-employment in your situation.
Correct.
So that would make part of your P&L for your self-employed accounts. So that's 10,000 USDC. Convert it at the date spot rate into GBP, whatever that is, $7,500, whatever. That's one situation done, tax dealt with over there. You then proceed to dispose of the USDC or some of it at a later date where the markets kind of shift between USDC compared to GBP. When you tap your card, you might, for like, I don't know, $4 for a coffee, the software will be able to pick up the differential between the GBP and the USDC value. Between the GBP at the point of sale
bought it,
and then the GBP value at the point that you received it, because that's the cost basis.
Right.
So there will be a small capital gain or loss there, and then there'll be income tax over here.
So
this is unbelievable.
One is personal income tax, and the disposal of it is capital gains.
Correct.
I have a question. Teacher, I have a question. Sir, I'm at the back of the class. I'd like to ask a question. So this one, are you telling me that if the dollar gets weaker, then we can lock in a loss for future?
If the dollar gets stronger.
Sorry. So you're telling me if the dollar got stronger or weaker, that could potentially lock in a loss or a profit from a stable coin if you disposed of it like what we're talking about and you were buying things with your card. So I'd never ever considered that.
Yeah, it does. It's going to be minimal, but the answer is yes.
Yeah.
It won't be. I mean, unless you're talking millions of pounds worth of stable coins.
But what if you're going to live your life via stable coins? And then it could be a thing, couldn't it?
Yeah.
Because I'm going to be honest, that's actually part of a plan for me. Not for now, but for the future.
Yeah.
So maybe I need to start having a real good think strategically about different stablecoin holdings.
You mean in different currencies?
I'd never even considered that until right now, this moment. I'm USD all the way through.
Most people are, because markets are determined in USD value.
Well, what happens if the dollar goes crazy and goes woof, fly through the roof? Then you're going to lock in. You're going to make a gain. So actually hedging your bets with different, maybe some euros, some dollars, some pounds potentially.
It depends how much you're holding, really. But if you want to mitigate that completely, you're just going to have to hold a stable coin that's pegged to the GBP in this instance.
Yeah.
And that should mitigate pretty much all of it.
Yeah.
Because I'll be honest, I'm thinking about potentially swapping fiat savings into stablecoins purely for yield.
Yeah.
So I'm actually thinking like...
I don't think you're alone in that either.
But I would be doing it in USDT, right? So if you did that and then the dollar suddenly got strong overnight considerably for something that happened, you're locking in profits there.
But I also think it depends
I never even thought that's crazy.
Where you're going to spend it. Because if you were going to spend it in dollars, then you'd probably be better off to have it in dollars.
I mean, yeah, so the bottom line is, if you have a USDC, USDT, whatever it is, US-based backed or US pegged stable coins, depending on the fluctuation comparative to the GBP, there will be a gain or a loss when you dispose of it, yes. Now, unless you're talking a colossal amount, the percentage of gain or loss is going to be minimum.
Yeah.
And in order to mitigate all that, use a GBP pegged stablecoin. And again, this is not like financial advice or anything. It's just I'm telling you that's how you could do it if you wanted to.
Yeah.
Honestly, I think if you are in a position where you're making a big gain, that means you've just done really well because you've backed the coin. It's outperforming.
Yeah.
So I don't think it matters too much.
Yeah.
This episode's we've rattled on quite a long time here, but we could do another one of these. I promise you, we are halfway through the questions. We're roughly running out. Halfway.
Yeah.
We could easily do more, but we haven't got time today. But there are some stuff that I'd like to run through very quickly.
Yeah.
And for this one is about what does actually get HMRC's attention. So in other words, we're talking about things like, listen, I'm not on about scaring people. That's not what I'm trying to do here. I'm just trying to give people a bit of a reality check because a lot of people think, oh, they can't see me. So what kind of things would bring, is it transaction size? Is it frequency? Is it particular behaviors? What kind of things might put a spotlight on people? So again, not to scare people, but just to make them go, oh, maybe I am in the spotlight and they don't even know it. Does that make sense?
I'll try to be precise so we can get through as much as possible in terms of questions. Number one is if you have some form of self-employed income or miscellaneous income and you put the words crypto in there. Like if, let's say, for example, you earn USDC, if you put the reason for that is crypto trading, instantly you're going to get an inquiry at the very least. Because you're probably doing it for, I don't know, podcast services, let's say. So you put down podcast services. The fact that you receive USDC is irrelevant.
Yeah.
It's nothing to do with your actual role. So that's number one. Number two is if there's a dramatic change. So you're submitting tax returns every year and then all of a sudden your miscellaneous income shoots down or up. That's another good reason for them to highlight it. If you have both a trade that interacts within the crypto space, and then you also have your general investments going up and down for capital gains tax purposes, they may ask to say, okay, how did you split the two? That's another good one.
Yeah.
Why else would HMRC give you a question? If you share a portfolio with anyone, husband, wife, civil partner, a friend, kids, whatever, like if you have a shared portfolio, they will jump on it quick lately.
Wow.
But yeah, I'll put this online. So a bit of background about that. I was going to take HMRC to court about something like that because I thought it was completely unfair. Last minute, they backed down, luckily, and all is good. But it's that serious. Like, they was adamant, like, no, shared portfolios, can't prove it, not happening.
Wow.
Yeah, it was ridiculous, in my opinion. But I see where they're coming from. But you're wrong. But yeah, so that's probably the top few.
Brilliant.
So, Jamie, we see loads of people at the moment being UK tax experts on social media. What is some of the worst advice you have seen given out? That you watch these videos and it just, your insides die a little bit. Because you know that actually people are watching this content because they want to learn, and the advice they're being given is actually terrible.
Yeah, so the first one is when they go, it's only taxable when you cash out. Wrong.
Yeah.
Straight up wrong. The next one is, you could just fly abroad and dispose of the assets and come back. I mean, technically that sentence is not completely wrong.
Yeah.
But the caveats are, you have to stay outside of the UK tax system for 5 years. What does that entail? You need to not be in the UK for X amount of days. What does that entail? It depends on how many ties you have in the UK. What does that entail? It depends on your situation. And so it's just too much of a blanket statement that is technically not incorrect, but it's definitely not correct. But yeah, those are probably my top two biggest irks, if you like.
So it was interesting, and we talked about this before when we did a live together. I said to you, it must really, really drive you mad when people give bad advice. And you went, I just love the fact that people are talking about it more. And I think that's the reality. And if we can sum up it, the reason why we want to do these podcasts, we love having you here because we get such great knowledge from it. But this is all about making sure that people are aware of their tax liabilities, because putting your head underneath the duvet and pretending it's not happening it's going to really, really catch some people out.
Yeah, 100%. And the one that's catching people out at the moment specifically is there's a particular, I say, scheme going around where you could create an LLC in Delaware or something like that, and then you dispose of your assets into that company and you're outside the scope of tax in the UK. 99.9% of the time that does not work for UK tax residents. It just does not work. I think people are talking about social media from a US perspective. I don't know if that works or not. I think it does, but for UK it doesn't. So just for your listeners and viewers, like if you hear that or thinking about it, it probably doesn't
because
work.
a lot of people will say, well, if I just move my crypto into a company, then that's fine. But people don't realise that when they move ownership from their personal crypto wallet into a company owned crypto wallet, they are disposing of that crypto and the company is buying that crypto, so that's going to be a disposal.
Correct. So you're actually doing the opposite of what you want to do. But on top of that, if you are a UK tax resident and you control and operate and manage a company that's overseas, technically speaking, for tax purposes, that overseas company is a UK tax resident.
Crazy.
So you're paying taxes on that anyway, even after you've disposed of it. So it just doesn't work on many levels.
I think what I'm getting from this is that the UK tax is complex. But if you know what you're doing, then you can navigate it. And I think that's why you have a job. Because if it was simple to do on your own, nobody would need you, would they? They could do it on their own, right?
I think you probably think a lot of people can do it. It's when it's more complex or you've got additional questions. Go and seek advice from somebody like Jamie. Go and seek advice from Jamie.
From me specifically. No, the important thing to note is even if you can do it, you need to weigh up if paying someone to do that is going to be more benefit to you or not. And that does boil down to, like, if I said to you, Matty, could you do your own taxes? And you said, yeah, categorically, of course I can. I said, how long is it going to take you? And you go, probably about 2 weeks. Okay, can you earn more in 2 weeks than doing what you're good at?
Yeah, exactly. Yeah.
Than trying to do what I'm good at. You know? And that's what it boils down to. So, and that's at all levels, even if you can do it yourself. So it's not just about you can't do it, you get someone. Even if you can, consider it.
Totally. Jamie, it's been awesome. I'm so grateful that you're here. I know that you add so much value to what the viewers' knowledge base is, and we will definitely have you back. It's been amazing.
Well, what you don't know is we've had a secret conversation. Well, you was in here talking about missiles, right? Don't ask, by the way. While you was in here talking about missiles, we were outside and we came up with a plan. Can't tell you what it is because it's top secret.
I'll tell you on Twitter. Follow me, CryptoTaxJME.
Nice one.
Seamless.
Nice one. Listen, I genuinely appreciate you, mate. I can't wait to have you back on here. I appreciate you. Thank you very much.
Guys, thank you so much for joining us today.